but fresh selling kept them deep in the red.
That's right, Harsha. In fact, the Nifty, however, did recover from the day's lows and finally closed above the 5,000 mark. It had slipped below 5,000, but ending the session at 5,036, down 58. The Sensex shut shop at 16,859. That lost about 191 points. But if you see the intraday graph, you will see there was in the markets. The disconcerting feature of the day's fall, however, was that it happened on record high turnover of 1,59,000 crores. So record turnover, that's what we saw in the markets, and the markets taking a big knock this afternoon. Harsha.
Well, the big factor in the markets today was numbers from Big Boy Reliance that posted quite strong third quarter numbers. Top line came in significantly higher than estimates at 56,856 crores, driven by strong volume growth. Big surprise came in on the GRM front, which came in at $5.9 per barrel. Profits too were better than expected, rising 14.5% year on year.
And for better perspective on the Reliance results and the market outlook, we're now joined by SP Tulsian and Ved Prakash Chaturvedi, the Managing Director of Tata Mutual Fund, and Sajith Mangat, our very own research analyst. Sajith, you go first. Take us through the unexpected surprise that we actually saw on those Reliance numbers and the other highlights.
That's actually, there was some cheers from Reliance in this market, especially on the back of higher net sales and the gross refining margins. Net sales were higher primarily on the back of good volumes coming in from the refining segment, which where volumes went up by nearly 6.3%. We saw good volumes jump coming in from the petchem division, where new capacities got added, and also the existing capacities were ramped up, and also in the gas segment, where they had an average throughput of nearly 46 MMSCMD of gas versus 34 MMSCMD of gas in Q2. So that all meant that the net sales was up to nearly 56,000 crores. On the gross refining margins front, it gave a surprise of at $5.9 per barrel as against the analyst expectation of 5.5, and that too at a time when gross refining margins for Singapore were at $1.9 per barrel. What Reliance basically said for going forward was that they see better gross refining margins for 2010. That's primarily because Singapore gross refining margins have improved to nearly $4.5 per barrel. But on the petchem side, they see pressure coming in. That's primarily because nearly 6 to 8 million tons of new capacities are expected to get added in 2010, and that would mean more supply in the market and more pressure on its margins in terms of petchem. Kirin?
All right, let's get Mr. Tulsian in on this conversation. Mr. Tulsian, there's been a 14.5% jump in net profit and a significant growth in top line as well. What did you make of these numbers? Positive surprise?
See, in fact, it is. I would say that it is a surprise, and having breached the bottom line above 4,000 crore. But I'll be more happy, Harsha, with the indications coming in from the management on all three fronts, because they'll be ramping up their gas production also to 80 MMSCMD, which is seen to be its peak by March end. And then coming on the petchem also, they have given a good visibility that going forward there will be going to be better margins and all that. And even on GRM front, which we have been seeing from Singapore benchmark, it has been showing an improvement. So maybe it is possible that here on they must be making a GRM of close to $7 per barrel. So if you have the visibility on all three accounts, I think sentiments look positive from here on.
All right, pretty much positive from here on. Mr. Tulsian, now these numbers also include the RPL numbers. How did you actually read the jump in the gross refining margins or the GRMs coming in at 5.9? The market was expecting it to be around $5.5 per barrel.
No, that's what I say, because in last quarter they had a GRM of $6, and it was estimated by the analysts, and even I was expecting it to be about 5.7. But I think there must be some inventory gain also of about $1.5. But as you have rightly said, the Reliance Petroleum Refinery has been ramping up. They have a better Nelson complexity. But it seems that in last quarter, they were pushing the products in the overseas market at a hefty discount, which now must not be the case here.
Very quickly, Mr. Tulsian, with the kicker coming in on the earnings front, what's your own outlook on the stock?
See, outlook is positive because, as I say, that if they are able to mobilize an amount to the extent of about $8 to $9 billion, that will act as a big war chest. And even seeing the better margins on their all core business, because I'm not banking too much on Lindell Bassell acquisition, so at least for next six months or so. So at least view remains positive on the stock for the next 2 quarters.
All right, Mr. Tulsian, we'll leave it there. Many thanks for joining us at SP Tulsian. They're taking us through Reliance's numbers and what he made of them. But let's talk about the markets now, because in spite of those good numbers, the markets took a fall today. Reliance, as we said, has surprised the street on the upside. Ved Prakash Chaturvedi joins us now. Ved, what have you made of the earnings announcements so far?
Well, I can't comment on individual earnings, but generally speaking, if you look at earnings announcements, either from large companies, particularly in the area of IT, automobiles, some mid-cap companies in the infrastructure sector, FMCG companies, by and large, the feeling has been that there is economic recovery happening. Companies are more confident about the business that they're going to do, and largely there has been a flavor of good cheer. Now, there has been some disappointments also along the way, as would normally happen, for example, from some large companies in the construction, engineering space, etc. But then the nature of that business is also very lumpy. So on the whole, I would say that the report card is positive. India Inc. is looking at a positive outlook for the economy and for economic growth in the future. Earnings growth numbers seem to justify that. And by and large, the mood of good cheer, which has been in the Indian equity markets, seems to have been resting on sound foundations.
Wait, that's on the earnings front. What about global factors? China's threatening with a curb on bank lending. You heard President Obama talking about proposals to restrict bank trading operations. How will these factors impact volatility in our markets?
My feeling has been for some time that we've seen a period of very good cheer in the equity markets, a long period of a sustained run, the dollar carry trade. I think there's some turbulence which is in the offing. We have the anticipation of some tightening in China. In our own country, on the 29th of this month, you will have the trade policy, and the feeling is that there will at least be some talk and maybe action on mopping away of liquidity. Similarly, news from America, if the dollar carry trade actually unwinds, then what happens to some of the flows that are happening globally? I think some of these questions will really come up in the next few days, weeks, and maybe in the next 1 month, and hence I think there's some turbulence ahead. But therefore I made the point that we should not forget, however, that the good cheer in Indian equity markets has been based on sound foundations, on sound business, on sound growth numbers that companies are giving, and on the very good outlook that business has in this country.
All right, Ved, from now to the budget, that is the key policy statement that everybody is going to be watching out for. Do you think the markets are likely to stay range bound, or are they likely to dip even further in this period?
I think the upside is somewhat capped. I don't see a huge downside from here. There could be some downside, especially if global markets and global indices come down, and if there is a outflow of money from India, there could be some downside. I don't think it's huge because earnings numbers are good. There is domestic liquidity, let us not forget, which in the last quarter comes to the market, especially from the insurance segment. And by and large, there's also been a left out feeling among investors in India, and a correction would be an opportunity for entry. So I suspect that money from different sources will come back into the market. Maybe the dollar carry trade will become the yen carry trade of tomorrow. And I think the long march of positive outlook for Indian equities will gradually resume. Yes, there would be a period of turbulence. I think we should brace for a period of turbulence in the very near future.
Ved Prakash Chaturvedi, many thanks for joining us with your perspective on the outlook for the markets. But coming up next on What's Hot, Tech Mahindra's earnings triggers off a volley of protests from analysts. 150 crores of restructuring costs booked in the top line raises many eyebrows.